So Labour's October budget has set a bit of an ominous tone for the rest of the year in the UK.
I will be honest with you. There is a budget coming in October, and it's going to be painful.
But what's actually going to happen that affects us? I'm a chartered accountant with 10 years of experience working in finance and tax. So in this video, I'm going to lay out what we know, what we can probably expect, and most importantly, what you can do to prepare for the October budget. So let's just set the scene first. Labour have said they don't want to increase taxes for working people. They said no increases in corporation tax, no introduction of wealth tax, no increases in income tax rates, no increases in national insurance rates, and no increases in VAT. That covers about 90% of the total tax system, so assuming they stay true to their word, we can probably narrow down the areas that are likely to be touched on in the budget pretty comfortably. Let's start here. I would be particularly surprised if there is no change to the overall pension tax system.
We have no other choice, given the situation that we're in.
A popular theory I see going around currently is the idea of changing the tax relief when contributing to your pension. As a refresher, you currently get tax relief on whatever your marginal rate of tax is when you contribute to your pension scheme. And when you eventually take it out, you get taxed as normal based on whatever your income tax band is at that time, with the exception of the tax-free lump sum, of course. The idea I see going around is the removal of the tax relief above the basic rate. This basically means that there will be no changes for basic rate taxpayers, but higher and additional rate earners would be capped at 20% relief, instead of their 40 and 45% tax rates. Here's my issue. Let's reframe this to what will actually be happening if this gets implemented. Because the reality is the pension tax relief isn't a tax relief, it's simply a deferral. As I mentioned earlier, you're taxed on this income when you eventually withdraw it from your pension pot. So if you don't get full relief when you contribute in, what is actually happening is effectively double taxation. You earn the money, pay tax on it, even if you're putting it in your pension pot, and then when you take it out, you get taxed again. There's also just a certain level of complexity to changing this that I just think would be a complete mess. There'd be mass changes needed at a company payroll system level and a whole host of other administrative burdens to implementing something like this. So I'm not a huge believer of this one. Where I do think there is much higher chance of change happening is with the inheritance tax loophole with pensions. Effectively right now, you can pass on your pension within your estate upon death, and in most cases, this will be considered outside of the scope of inheritance tax. This has always been considered a bit of a weird piece of legislation in the tax world, so I think it may be a low-hanging fruit for Labour to fix and generate some additional inheritance tax. Another hit I could see feasibly happening related to pensions is some form of cap to the tax-free lump sum withdrawal. This may come in the form of a cap of the tax-free lump sum amount based on the size of your final pension pot or your tax band when you withdraw it. Headline here is that I could quite easily see changes to inheritance tax related to pension rules and tax relief pension rules to some degree. Wider sweeping legislation changes to the pension landscape I just don't see as a feasible change to make in October. Next, let's talk about capital gains tax.
Those with the broadest shoulders should bear the heavier burden.
This is another area where I'd be stunned if there's no reforms. The obvious one here would be just an increase in the tax rates of capital gains, closer to the income tax rates. Currently you pay 10% if your basic rate and 20% if your higher rate, with a few percentage points more if you're selling residential property. The problem with simply increasing this rate is that, strangely enough, it won't necessarily increase the tax collected in the near future, which is, obviously what the government want. The reason behind this is that capital gains tax from a timing perspective is largely in the control of individuals. You can increase the rates of capital gains tax, but that doesn't mean that people have to sell their assets. And studies show that increasing capital gains tax rates actually temporarily decreases the amount of tax collected, at least in the mid to short term. So a flat increase to rates may not be what we see here, or at least may not be the smartest move. Business asset disposal relief, formerly known as entrepreneurs relief, is a relief on capital gains tax for the first 1 million of qualifying gains, whereby you only pay 10% rather than the higher rate of 20%. This relief applies to sole traders or business partners who hold more than 5% ordinary shares in a business for over 2 years. I can also see Labour making changes to this by either lowering that lifetime £1 million allowance or by removing the relief altogether. Inheritance tax is a tax system riddled with loopholes, and I can see there being a chance that certain tax loopholes are closed in the October budget. The 40% inheritance tax rate is pretty eye-watering as it is, but the reasonably generous tax-free bands associated with inheritance may be an area Labour play around with. This currently sits at 325 grand, with a further allowance of 175 grand when passing on your residence. So a reduction to either or both of these allowances wouldn't surprise me at all. More importantly, it would be nice to see Labour focus their energy on tackling some of the more complex inheritance and non-dom based tax loopholes to raise some of this tax revenue. But I'm going to be honest, realistically I don't see it happening, at least not in the October budget. These more complex loopholes often have some inadvertent downstream impacts on elements of the tax code that they had no intention of changing, so this is always quite a delicate balance.
That is a really big ask and really difficult to hear.
So what can we do? Let's be clear about this. Pledges in manifestos and legislation that governments have strongly suggested will happen have been broken before. David Cameron famously promised no changes to VAT rates before he was in office, which was very swiftly followed by him raising them as soon as he got in. So this breakdown is assuming Labour stays true to recent comments and manifestos. As well as this, I could be just wildly off the mark with my predictions, and let me please reiterate again that this is complete speculation and is not financial advice. The Labour Party have made it clear, however, that this will be a painful one, so don't go into it expecting anything positive at all in terms of how much tax you will be paying. I wouldn't be changing your behaviour preemptively massively with this information, but maybe if you're already set on, say, selling some assets that would be subject to capital gains tax, or are mulling over your options in terms of tax-efficient methods of withdrawing your pension, including the tax-free lump sum, the potential of these sort of areas being in the firing line for Labour's reform could be factored into your overall decision-making process when deciding what actions you may take. There may genuinely be some new rules to consider that change the game tax efficiency-wise, so as soon as we do have confirmation of the budget, I'll bring out a video explaining how you can navigate the inevitably painful changes that are upon us to make sure that you're still able to stay on top of things tax efficiently. With that being said, don't panic and don't be too negative. Yes, the budget will be a bit depressing and painful. It will be to raise tax revenues, and that's going to come out of the pockets of you and me. There are, however, some areas of the tax code that could raise a good chunk of this revenue purely by closing loopholes and making some changes that I don't think anyone would argue with massively. So the result of this could be far less painful than some of us are speculating. In the meantime, just keep doing the right things financially. Don't let this derail you. It's not going to completely change the financial landscape of the UK. I recently released a video giving step-by-step guidance to investing for long-term growth, which is a great place to start if you're looking to get serious about investing for your future. Thanks for watching, and let me know if there's any questions and what you think is going to happen in the budget. Thank you.